All right. What's going on, folks? It's Sunday, about 11 a.m. Um, we are going to do your weekly equity markets breakdown. All right. So let's get to the analysis. And Faisal, I wanted to talk to you about what you saw in the markets last week and what we should be expecting for the week ahead. We opened with coronavirus, and the first thing that we talked about that really struck out at me was this movement down here, this S&P 500, was due to the trade war escalations that were happening in about 2018 and early 2019. And so your thought process is that the trade war was probably far more impactful than the coronavirus is, correct?
I think long term, yeah, it created a lot more uncertainty in longer aspects, like whether or not a company was able to get products from China, which ended up being their best avenue as far as the lowest cost for their business. People had to deal with problems like that, but in the end, they were still able to do business. So what if you got to pay an extra dollar for your, per product, because you can't get stuff from China? You still are able to do, business day to day as usual. You're just not making as much money. With what I'm seeing with the virus now, there's a real risk that your customers could stop showing up and day to day business can be completely interrupted and come to a stop. So I think that's the difference that we're seeing right now. Both have been marred with significant drops, but I don't know if we've seen the worst of the virus just yet.
Yeah, and we were talking about this earlier, right, Faisal, where basically, every morning that you wake up, you just start hearing more and more cases about the coronavirus,
Yeah.
and it doesn't really seem like it's stopping. I mean, well, also it can't really stop because we have no way to contain it, right? There's no cure developed yet. There's no way for us to basically contain the virus because we basically have to stop telling people, or rather, we have to start telling people don't go to events, don't go to public places because you don't know who has it and who doesn't. And the fact that this virus can stay dormant in your system for almost 6 to 9 days and then start showing signs is even more scary.
Yeah, it is. And I think what's even scarier is, at least in Houston, Texas, they had, someone come in for coronavirus symptoms, and for some reason, either they weren't properly able to test it or whatever, they actually ended up releasing him, saying that he was just sick with the flu or something like that. And then later on, when I think diarrhea and other symptoms started to become common in the coronavirus, patients, they ended up figuring out, oh shoot, he actually did have coronavirus. We got to get him back. And so you're having a lot of these scenarios where it's like the spread is not really being contained because the identification is not even where it should be, as far as, for proper containment. So there's still a lot of risk. I think the likelihood that you're going to see numbers really go up this week is very high in the US. So it'll be really interesting to see how the market digests that, and whether or not it starts to price that in, or whether or not that drop that we've seen has been enough pricing in to where the market feels like, okay, this thing can get contained within a quarter, 2 quarters. China's saying that we're starting to get back to business. Foxconn, which is running at 50% capacity, they produce, the iPhones for Apple. They're saying they want to run at 100% capacity by the end of March. So if business is starting to go back to usual in China, where it kind of started, you could definitely have the notion that people are pricing in, okay, it was contained in a quarter in China, that may be what happened in the US. But like I said before, our identification is not even proper right now. So, I don't even know what it's going to come to. I think next week it's definitely going to be like we saw this week, where you're just going to see cases every day continuously rising.
Yeah, yeah, definitely. Um, and before the call, we were actually talking about how Bitcoin in some cases has sort of led the market. Um, led the market in a sense that it started dropping aggressively before the S&P 500 started dropping, right?
Mhm.
And the reason why I want to talk about that is because, what's interesting about that is Bitcoin itself is, a very speculative and volatile asset, right? And so if the market participants start seeing, especially people who have a good amount of money invested, if they start seeing signs of weakness or issues happening in the global economy or things like coronavirus, that the first thing that really gets sold off is speculative assets like Bitcoin. And so in some ways, I feel like it's foretelling of what could happen in the equity markets of what's happened in Bitcoin. Because just over the weekend, and I was just showing you a chart earlier, we just started seeing Bitcoin just get aggressively sold off. And I would think it would be really interesting if we started seeing S&P 500 gap down again come Monday. Because if we pull up this chart, of Bitcoin, right? Since Friday, Bitcoin has dropped another, let's see here, the top down, it's dropped another 9%. So I'm not saying that the S&P 500 has to drop the same amount,
Oh, damn,
but
that's
wouldn't
a
it be
lot.
really interesting? I know it's definitely a lot. See, the funny thing is in traditional markets, when we see a 9% drop, and, you're like, holy crap, it's
Yeah,
like the
that's only
world is
two
ending.
candles. That's like 2 wicks.
For Bitcoin, man, that's just like a regular Tuesday.
Oh, damn, that's stressful, man.
I know, but hey, the thing is, speculative assets like this. I mean, when they go one way down, there's money to be made, but there's also money to be made in the other direction where you see, price just ripping through. I don't know, like 90, 100% in less than 2 months.
Hmm.
But anyway, point is, it would be really interesting if we started seeing, Bitcoin sort of tell the story of what could happen in the S&P 500.
I think that's a great point to put it out, and especially because South Korea seems to be like a country dealing with, well, also Italy, but South Korea, they're a big player in Bitcoin. They have a lot of Bitcoin buyers there. It'll be interesting to see how that plays out, because they participate a lot in the Bitcoin market. So if they start to feel like, okay, there's a lot more near-term risk, we can't put as much into these speculative assets. I think, yeah, you could definitely get the general theme for how people are feeling about the market the market in general.
Right, right. So can you summarize, because I know in your post you wrote a couple of things of areas that you were watching.
Hmm.
Let me see here, these right here. And I really find these helpful when you do this. And I hope people in our community do as well. And those that are watching on YouTube right now, folks, again, Facile puts out these updates on a day-to-day basis. So you know exactly what's happening at the beginning of the day, pre-market, middle of the day, and then post-market closing updates, like we have over here. So if you're watching this, subscribe to our YouTube channel, give us a thumbs up, or come join the Advantage membership so you can get updates like this, okay? Now, so you were saying that IWM is definitely one of the, what exactly did you say last time about IWM? I
It is
forgot.
the quintessential index that you need to watch. So, if you're not familiar with what an index is, you've probably heard of the Dow Jones and the S&P and the NASDAQ. Well, there's actually four indexes. There's the small cap index, which has companies with a smaller cap. I believe it's like a billion, 500 million to a billion. Those are considered the small cap companies that are largely dependent on loans for growth, and that they're growing, somewhere between 20% revenues. They may not have earnings at this time, but they're very, they're kind of like the Bitcoin of the stock market. They are the more speculative and riskier assets. So when you start to see them move first in a certain direction, whether it's up or down, that's usually foreshadowing kind of the direction of the market and could really give you a good sense of what the sentiment is about the market. And, as you can see, like, look at what happened to the small caps Friday. I mean, they just broke down significantly below, 146, which was their support level.
Right. And this is the level I think you said to watch for IWM. One, actually, Yeah, you were hoping we would close above
Yeah,
148.30, but we didn't do
it
that.
was terrible.
Oh
Yeah.
man. Yeah, things are definitely looking rough. I mean, good thing is, I guess, whether you look at the IWM or S&P 500, they are pretty much, double bottoming right here on key support levels. But
See, but that's the thing. You're seeing like the S&P really hasn't broken down the same way as the IWM, and and vice versa. To go on that flip side, as we've been going up in the market, despite having low interest rates, you have still seen the small caps not really make the same type of gains that the S&P has made, and so that's why I think it's showing a little bit more of a breakdown relative to where the broad market is currently, but that could give you a sense of how people exactly are feeling, and I kind of tie that into, okay, if we're getting these extremely low rates, but I'm constantly hearing the U.S. consumer is great, and everything domestically is fine, then why aren't these small caps like exploding? Because they should be doing fantastic if they can get loans at a very cheap rate. They have stimulus. I think we were talking before about the drop in oil, which we'll get to. That's going to create a huge amount of spending money for the American consumer and the global consumer. So you want to see these factors directly affect small businesses and these types of and the IWM cap, but you're not seeing it in the price performance, and that's really troubling to me. That's why I say even beyond this coronavirus, there may be something else that we're not paying attention that we're not paying attention to, that we're not aware of, that could start to lead the U.S. into a recession or some type of regression that I don't think was priced in before.
got it, got it. And I mean, it's also very possible that we're now finally, maybe coming back down to earth after this sort of aggressive, uptrending market that's been so overextended. Doesn't
Hmm.
mean we have to come all the way down here, but it just means that, hey, maybe we need to come down to these levels again as we
Yeah.
went up a bit too high, you know?
Yeah, and I want to go ahead and point something out to people, like, so we have, there have been two thoughts in my mind about where we are currently in the market. Are we, have we reached a spike down in such a short amount of time to where the market is undervalued, because you've never seen something historically with this type of volatility? So are we actually, have we, gone down enough percentages to where we can start going back up, or is this actually part of an overall correction? We could actually be 40% done with the correction. And, to go back into what happened with the trade war, you see in September, we kind of had that initial spike down, went all the way down pretty fast. And then you start to see it kind of build, try and build a base around there. You see how it created a range and kind of traded between that range. And then it continued to spike down even more so. I think that's the type of risk that we're still in currently. It's not, that's why during the week I was really saying it has to break above these ranges. I'm looking for um, the market to consolidate within these ranges, because we could base out here. But even if we do base out here, there's still a likelihood that if we do not break above the top end of the range, we could continue to go down, even as people start to get more comfortable with the market, as it has these 1,000-point swings to the upside, and people start to get drawn back in again. So, keep in mind these types of patterns, because regardless of what you hear, like I heard a lot of people saying Friday that it was a great time to buy because the market was historically oversold. And, even I was saying that the likelihood of a bounce up on Monday was very high. That doesn't mean we're done. That doesn't mean the correction is over just because it was a historical spike down. So I want people to, take a look at what happened with the trade war. That type of technical setup is something that I think could be mirrored in the near term future if this virus gets worse.
Right, right. And I guess what you're saying is this movement right here, for those of you who are watching this on YouTube right now,
Yes.
um, this sort of ranging pattern is where the market was trying to figure out, like, what is going to happen with this trade war. And in that time, if it broke up, then we'd realize, okay, there was some positive resolution of the trade war. And if it broke down, which obviously it did, in that time, we realized, okay, this trade war is not going anywhere. It seems like things might get worse before they got better. And then around this time was where we started seeing, some tariffs being lifted and some resolutions start to be created, right?
Yeah, exactly. And more so to that, like for people who are trading the market, because I'm a trader and when the time is appropriate, I love to make long-term investments. But as a trader, you really have to keep in mind that's what I've been trying to do last week, and I got a little bit in the butt because I did not necessarily buy at the low end of the range. I kind of thought, okay, maybe the range could be higher, and then the range was actually set, and I got a little bit caught. But now, for the time being, probably for the next week or two, as the market digests this coronavirus, you will probably see, the market have a couple of days where it ignores the coronavirus, and you'll be like, oh, the market's doing exactly what it was doing before, when the coronavirus was spreading in China, yet the market continued to go up. Don't be fooled by that. This market has just shown you the type of range that it wants to trade in, whether it's between, yeah, exactly that. That's the top end of the range. And all the way at the bottom end would be, I would say probably like 2,900. I wouldn't go as far as that, but 2,900. Yeah. I would say that's kind of the bottom end of the range and the top end. So you kind of want to stay in between that. You want to buy at the bottom levels and trim at the top levels. You really don't want to take that much risk because, as we've seen before, if you hold on for a day longer, your entire gains could be wiped out with 1,000-point drop. So that's just the way I'm looking to play it for this week, and I think people should really keep in mind about these short-term ranges.
Good point. Good point. Um, yeah, that's a great point to mention. Yeah, this is really the range that if you are a trader in this market, and again, folks, we're not here to give you financial advice or anything. Like Faisal said, we do trade these markets actively, and our job is to show you how we are going to approach this market and trade it for the upcoming week. So this would really be the top of the range. This would be the bottom. And if you're either buying S&P options or futures contracts or anything, or whether you're just trading equities or individual stocks, this is really how you want to be trading the range. You could essentially buy the bottom right there, sell the top, or maybe even short the top and start aiming for the bottom.
And just real quick, I'm not a financial advisor, so just take this with what you will. But I've been trading options for a long time, and I really have to tell people in stages like this, when the market gets sold off so much and you start to see volatility go high, that directly impacts your option prices. And so, for those who don't know what implied volatility is, if you're buying options, not understanding that during this time, it'll kill you. Like you could be right in your thesis, but if you buy the wrong options, which is very likely during times like these, you'll get crushed. And so I want everyone, it's a great thing that you mentioned options. I want everyone right now, if you're trading options, go look at implied volatility, go study that, and understand how exactly that affects your trading right now, because implied volatility is literally high across the board, which means you are paying an extreme amount of premium because the market is so volatile. So, the strike prices, the normal volatility before the downturn was, the implied volatility was low. There wasn't that much volatility overall in the market. So the premium that you were paying was low. Now that you've seen the spike down and you've seen values completely, change in the matter of weeks, you are paying a lot of premium for options even down here. And so the result is, if your stock is not going to have the same volatility to the upside as it did the downside, you will still lose money. Like Facebook could have gone down 10 points. You could have bought options, at the low. If it only goes up 5 points over the 2 weeks, even though you bought at 5 points above, you will lose money, period. Like you will be paying such a high premium for when you bought it at the low. If it does not match the volatility to the upside, you're going to be losing money, even though you were right on saying, hey, that was the bottom and it actually goes up from here. So I don't know if I was clear on that, but if y'all, could really check out implied volatility, I really think it'll be useful during times like this.
Yeah, that's a great point. And we spoke about this earlier. So folks, those of you who are watching on YouTube, we are actually going to start opening up channels where Faisal will be talking about oil, and he will start giving potential updates that he is watching in terms of options. And I will be updating positions on Forex. So 3 new categories on assets that we're going to discuss: options, oil, and Forex. So if you are interested in trading any of those, do come join Cryptosomniac. All right. Okay. So going back to the stock market. Okay. So for the week ahead, aside from this ranging that you're watching, what would happen? I mean, what would, I guess, change your mind, if you started seeing, IWM just start to break down from these levels? Do you think that's sort of foreshadowing in what could happen in the S&P 500 and maybe the large cap stocks?
Oh, very, very much so. I think if you don't see IWM recover, literally Monday, latest Tuesday, oh yeah, you can. I think that's what I'm thinking in my mindset is that, okay, money is not going into the IWMs when a lot of economic factors should be pushing money towards it. I'm thinking this market probably has another leg down. So yeah, I'm really using this as a gauge of the overall sentiment. How exactly are people feeling to get into risky assets if they're feeling good at these levels? Because IWM is down, what is it, like 15%, 16%? It's down a lot. So if people are unwilling to get into these assets, then I'm probably going to hold off on my other stocks too. I mean, you can still kind of trade within that range that I was telling you, but I would hold off a little bit if you really just start to see no movement in the small caps. You really want to see them bounce back fast and early in the week, come this week.
Gotcha. Another thing to note, this is something I pointed out last week as well, the 10-year T-notes,
Yes.
or the future contracts. It
Look at
seems
this.
like they're just skyrocketing,
Yeah, exactly.
So the way I read this, and maybe you can give us your insight too. The way I read this is, it seems like overall people are, I guess, whether you want to call it retailer money or institutional money, it seems like it's really flowing into T notes and bonds. And usually when that happens, that speaks of uncertainty, maybe in the economy, maybe even the equity markets. And that's why you see these moving up and then the equity markets going down. Is that a proper assessment?
Partially. I think, I'll give you one chart to look at that'll surprise you. Go ahead and type in XLU. Now, this sector, actually for the week, while the market was I think barely up, this sector actually was up 7% for the week. You saw massive inflows from the lows all the way to the high, and the utilities actually closed very well for the week, which tells me a couple of things. So even though money, yes, is moving out of treasuries and going into bonds, you could say, there's still a huge amount of investors that are moving into these dividend yield assets. Like I think for the week, the consumer defensive sector was up 4.2%, and the utilities were up seven something percent overall. And you really shouldn't see that considering, tech was flat, everything else was mostly down except for healthcare. You're really seeing these big institutional investors have to put their money somewhere because they're not getting the yield from the treasury rates. And I think that money will continuously go into these dividend assets and mostly utilities. So, in regards to the 10-year rising so much, there's still, or I'm sorry, the 10-year selling off so much, there are still pockets of opportunity that you're seeing. Things are starting to make sense. And I think another thing that I'm watching in relation to the 10-year is the housing sector. I've mentioned it a couple times on the Discord. ITB is the ETF that I watch for the housing sector. Now, this sector, it should fit with all things that are going right in the economy. So you have low rates, even more so than small caps. Like you have low rates. The consumer has been so far healthy for a long period of time. They're starting to get a little bit more money from gas prices, which kind of, I don't think should affect, the ability to buy a house or whatever, or the comfort, how people feel to buy a house. But I would also take a look at this as rates continue to go down. What does housing do? Because a lot of these housing assets are trading at they're fairly valued. They're not extended like the other ones, and they have a lot of growth potential in the future. As far as where the U.S. consumer is right now, where unemployment is, people should be buying up these housing assets, considering they were kind of not doing so well for the past couple of years, and just more recently, they've just been on fire. From 2019 to now, they've almost doubled. And I think this is something, as rates continue to go down, keep an eye out. You want to see stability in this sector. If you want to get more clarity on, okay, is there something else wrong with the economy? Could this lead to a regression or a recession type deal? Because if it does, you will see the breakdown in housing. That'll probably be one of the first sectors to break down.
Okay, got it. Now, are you concerned about, I guess, this kind of turnaround? Because housing went up, but by Friday, it pretty much closed down even lower, closed down around 44.2 points, right?
Yeah, kind of like I still think it's in its support range. I want to see it. If it starts to break down below 43 and hold below 43, I think that's a very bad sign. Or actually 43 and a half. Go ahead and put 43 and a half if it breaks below there. But this type of volatility, no, it doesn't scare me, even though it went all the way up to 43 and a half, 47. I just want to see it stabilize at this range. If it starts to break down, then I'll get worrisome. But for the move that happened from Thursday to Friday, no, I'm not really taking in too much to that.
Got it. Okay, so come, say, Monday and Tuesday, you're going to start wanting to see some recovery in, say, IWM, maybe even ITB. And
For sure.
does that mean you're going to watch the market and wait, or does that mean you're going to sort of buy the positions as wherever they open?
Well, like I said, like if I see stability from the small, or I need to see a reversal from the small caps, and I need to see stability from ITB, and I also need to see stability from interest rates as well. If I get all three of those signals, then I'm willing to buy when the market is at the bottom end of its range. I'm willing to trade that range that we were going over before. If I'm not seeing these types of things happen, then I think the market is at risk again to go down another week. Could be something 5 to 10% with this type of volatility. You kind of just don't know. But those are the three starting signs that I'm looking for, to start off the week. They need to show me something. They're all correlated to each other, and you want to see things make sense. So, keep an eye out for those.
Okay, got it. All right. Well, looks like we have a few things to look out forward to. Again, folks, give us a thumbs up if you enjoy our content. Fastcell will start providing updates come Monday, and we're going to start opening up the oil options and then Forex channels probably at the beginning of April. Okay. Hope you guys enjoy this video, this content, and give us a thumbs up. And we will see you next week, next Sunday. All right. All right. Thanks, Faisal.
Thank you, and take care.
All right. Bye.